Good afternoon. Good afternoon. Tap, tap, tap. Is this thing on? Yes, sir. We are back at it again. It's your favorite realtor, Robert Lee with eXp Realty. And I have a special treat for you guys. I have a guest I'm going to bring on in a second. But y'all already know what I'm going to ask y'all. This information can help somebody, help a family member, a cousin, a sister, auntie, mama, uncle. You never know. So whether you need to purchase a home right now or whether you need the information yourself, just share the information. Share it or tag somebody you know that might need it. And for you people that's watching this about to get off work, listen, we finna give you something to ride home with. And then, hey, for the ones that's gonna look and then say, I'm gonna get back to it later, you better get back to it later because it's gonna be recorded. So don't worry about it. It'll be available for you to get back to us later because I already know how y'all busy folk act, especially on Friday, right? Y'all ready to go turn up on a Friday? Listen. So I'm finna drop some knowledge on you guys today. And what better way to do it than bring in the expert? You know, because I always tell y'all, listen, you can go out there and listen to social media all you want. You can go out there and listen to your cousin all you want that ain't never done nothing. You can go out and listen to your uncle all you want. But listen, the best way to get your information is to find an expert. So when y'all hear me talk about loans and talk about mortgage loans and talk about things of that nature, listen, I'm just quoting what the experts say. And today I'm bringing one in. And matter of fact, I'm finna bring him on right now. I got Mr. Alonzo Stanley from Bell Bank Mortgage. I'm finna bring him on. Mr. Stanley, are you there with me today?
I am. How you doing? Thank you for having me.
Man, listen, I'm blessed. I'm glad you took some time out of your busy schedule to bless us with a little information. We're not gonna hold the people long. I told them, I promised them. But listen, just go with the flow. Because hey, if you get to spitting, we could be here all day. Listen, I don't mind. They need to hear it. But I do understand. They're gonna act like they're busy, but we're at least gonna reach the people on the replay. If we don't do nothing else, we're gonna do that. So if y'all have any questions, just let me know. I also put his email. It's company email at the bottom. Y'all see it scrolling at the bottom. Y'all can see how to reach him. Y'all can look him up. Y'all can check his credentials. Listen, the guy know what he's talking about. That's all I got to tell you. This gentleman, he knows what he is talking about, and he is here to help you get into the houses. He's helped to get you into the houses. That's our job. Listen, we for the people now. That's our job. So, Mr. Stanley, tell me a little bit about yourself. How long you been doing this?
20 years, right at around 20 years. Quite a long time. I'm born and raised in Nashville, and I've been serving this area for that length of time. Worked for multiple organizations over that time, so I got to see how companies work, things I like about them, things I don't like about them. And I'm at home. I'm at home with Bell Bank, buddy. So y'all probably hadn't heard of Bell Bank, but y'all gonna hear about it. It's a great place.
Listen, that's why we're here for. You gotta let them know. So we got somebody that's been in the game 20 years. Some of y'all ain't even got no kids 20 years old. Now listen. So when I tell you experience, I'm talking experience from the top to the bottom. All right, so right now, so let's go with a little generic information. So some people always say what it takes to be able to get into the home buying process. So let's talk about that. Let's talk about at least the what would they need in the beginning to just say, you know what, I'm finna go call Mr. Stanley and see if he can give me some money.
Yeah, well, we hear a lot of horror stories. We hear a lot of different examples. Credit being one of the first things that comes up. What's the minimum credit score? And frankly, companies, there are some differences out there. Not all companies are the same. You'll find some that may say they can do a 500. We're a bank, so we're a little bit higher than that. Really prefer a 620 plus. But credit right there. You know about credit, Robert. You know how that works, man. It's just education. And once you know the basics and have a few things, you can get it right and get some help. And that's what we're here to help you with too, to understand that.
Okay. So with that 620, because I had some people say that I had a 620, but I still got denied. What do you think could have happened to that? I know each client is different. Every profile is a different profile. Sure. But for the most part, when you get that client that's coming in all three scores on the average, and let's say they averaging about 645, how would you get to the point where you still decline the client?
Well, like you said, there are various factors. But if we're still in the credit world, sometimes you got recent late activities, recent collections, things that are within the 12-month frame. That really kind of make a lender scratch their head a little bit, because when they get ready to lend some money, they're like you or anybody watching want to lend some money. They want to make somebody at least got their act together for a little bit of time. So 12 months is really that time frame that we kind of look at. Sometimes there's recent things that happen that can hinder them. But then you also have DTI, or debt to income, so and we can break that down pretty easily. If you got $1,000 a month income, the goal really being about 45% being your total debt. So your house note and whatever else in that case would only be $450 a month, if that makes sense. So you could take your number. If you make 10,000, so you can go ahead and do the math and take 45%, and that should be your total bill, including your house note and those type of things. If you're up too high on your DTI, that might be another factor that prevents you from buying. If you don't have money, if you don't have enough money in the bank to assets to cover the cost of getting in, and maybe even a little bit of reserves, because it costs money to move. Even if we get you one of them wonderful VAs or USDAs or moving forwards or THDAs, one of them down payment assistance type programs, it's still going to cost some money, to earnest money, appraisal, inspection. And so we need to make sure you have that, and maybe a little bit of breathing room as well, preferably.
Okay.
Those are things.
I'm glad you spoke about the DTI. So going back to your $10,000 a month example, Lord knows I wish I was making that. But let's just say, so with the $10,000 a month, you're saying I need $4,500 total. That's kind of the wiggle room. So that's saying if I had my car loan, my student loan, and my house note all added together, they can't be over 45.
Well, let's break it down just a little bit.
Okay.
Now, that's just a general. Now, there are some programs like THDA, they say 45% max.
Okay.
So if you made 45.001, you'd have to come down a little bit on your price or pay something off in most cases. So let's just say $5,000 a month is your gross. Let me get that camera. $5,000 a month.
We can see
All
it.
All right. So 45% of that, where we at, is $2,250.
$2,250.
Okay. So that would be if you had no debt whatsoever, none. Okay. Your house note could possibly be up to $2,250 in some cases, maybe even more. There are programs that go higher than that. I got a program that will go up to 50% DTI on the back end. And what that means is that your purchase power is better. And we know we need purchase power these days in this market, right? Right. The more purchase power we got, the more we can qualify for, more houses we can qualify for. That just gives us more options, And so, so you want to limit your debt as much as possible when starting the process. But before I get into that part, I just want to say, before you pay off anything, talk to a specialist, a loan officer, because you might be in a situation where you're hurting yourself by paying off some debt. People just want to go jump out there and start paying off stuff, especially bad stuff. I'm fixing this, I'm disputing this, that, the other. Talk to a loan officer to make sure that we're doing things the way it needs to be done for you to reach your goal.
Exactly, because you're going to be wanting to look at the file anyway. So it makes sense to go ahead and get in touch with the person that's go ahead and take a look at the file and is going to investigate the file. So when you said that $2,250, so if I was keep that calculator up. So if I had a high car payment because I didn't have good credit back in the day, but I got a car 2 years ago, and now they got me for a $500 payment. So then how much home could I get? Do the math. Help these people do the math on that.
$1,750 would be your payment with everything included.
$1,750. So that's what I want you guys to think about. That's what I want you guys to look at. So a lot of times,
latency on my end.
Okay. And see, and that, I think we was kind of in and out. You still there? Okay.
I'm here.
And so that's what I want them to look at, because a lot of times we get in that and we rush in that and we feel like, oh, well, I'll make this amount of money, I should be able to get this house. But then we forget that we do got some credit card debt. We do got that high interest rate card note over there, and so of course that's going to bring things down. So it always has to fit within that ratio. I want to shift to the percentages real quick. So everybody's afraid of the current percentages right now, and they just feel like the current percentages are like the worst ever in life. Can you shed a little light? Since 20 years, you haven't seen worse than what we got right now, right?
Oh, for sure. I mean, rates are really, we're still quoting some in the 5s, 6%. I quoted one today at 4.99. There have been 7, 8, 9, 10. And we just hit record lows. And when you get down in the 3s and the 2s, of course, you're not going to be there forever. The point being is that, and there are options two, depending on your circumstances, that we can maybe see about buying down a little bit of rate, or
What is
you
that?
know.
Talk to me
Okay.
about that. How can I do
Yeah.
that?
So there on most loans, standard loans, FHA, conventional loans, things that it's pricing. So when you lock in a rate, you're reserving a rate at a certain price, right? So you can though pay a higher price and get a lower rate. And sometimes it's beneficial, especially if you're going to be in the home for a longer period of time. It will make your closing costs a bit higher, right? But you just gotta look at those things and see if it's going to be worth it, if it's going to be something that is for your benefit.
So if I was quoted, let's just say for example, I was quoted a 5.5, and for
Uh-huh.
whatever reason, I could buy that down to like a 4.8.
Hmm.
Do I have to pay that up front, or can I pay that at closing?
It would be at closing. It would be
Okay.
at closing is when you at settlement. So that's when they'll collect those origination fees. Okay. Um, it's a lot of things out there going on, especially new construction. I'm seeing a whole lot. My daughter's she works for me, right? And she's looking to buy, possibly she was considering some things, and she went out new construction. And so they provided they said, we got to use my lender. We're going to give you $5,000 in fees. In $5,000 in closing costs. And so I was like, okay, let's look at the numbers. Let's look at it. We got to go. She competing with us. So
Yeah.
so we get that worksheet, man, and the rate was like 5.625. It was the fee was $5,000. The origination fee.
Was
They
it?
charged $5,000 to give us $5,000. So please watch the wording and get a second opinion, because when we worked it back, we have a loan that would allow them to put with 1% down. So with the 1% down and no monthly mortgage insurance, we were beating it by like $200-$300 a month, and they were bringing less to closing. So just don't fall for the little okie doke, as we say.
So you said two things I want to touch on. So the first thing is always get a second opinion.
Yeah.
I try when I tell my clients, they one of the main reasons they love me to death, because I even tell them, if you feel like I'm not doing a good job as a realtor, then you're paying for this. And in the buying situation, they don't pay for my services.
Right.
But we already know that you always want to have the best representation of you at all times. So
Right.
that's the first thing I tell them. If you don't feel like I'm doing a good enough job, I'm okay with that. Let me know, and then we can find you somebody that can serve your needs better. But in the lending world, I get discouraged, and sometimes I get upset when people think, well, I've already talked to a lender, and that's the end all be all. And that's the last thing you want to do. So if I had went and got my credit ran by a lender, and I'm afraid to run it again, how long do I have?
Well, you got typically up to 30 days for that one hit. Large purchases, autos, and mortgages, check out myfico.com. That's a good resource. They'll spell it out. Large purchases. Now, if you go into every department store, get a bunch of credit cards, you're going to get your credit ran hit each time. That's not the same thing. But large ticket items, you should be able to shop for those. But I want to hit on something too, man. I just had a client that was working with a real estate agent, and the real estate agent was out of town, and they walked through this new construction, came through the door talking about, we got a real estate agent. But they was like, well, you need to put an offer on this house today. And they thought they still had their real estate agent, but they signed something and they were like, well, they weren't here. They weren't present. You can't use your real estate agent. Now they got a bunch of questions. They're asking me stuff that the real estate agent should be able to give them information on. They don't have representation. So I just wanted to emphasize how important it is to have a buyer's representative like Robert here, to be able to work with you, to be on your side, to be able to help you. Because if you walk in a place, and the first thing a listing agent is going to want to know is if you have a real estate agent, because their commission goes up. They get paid more. So they're going to want to grab you and keep you. And that's not necessarily going to be in your best interest. So again, I just wanted to emphasize that.
It's not. And I'm glad you mentioned that. I actually had I had one of my brand new agents come in, and he was dealing with the same thing. He had a person that was trying to purchase, and they actually went into where it was a new construction home, and they could not get in contact with nobody. And the lady had gave him a quote, but then out of nowhere, she raised that price without explaining anything. and she couldn't get in touch with him. She couldn't get in touch with him. So she actually just reached out to him because she saw one of his posts on social media, and he was able to get in contact with them, and he was able to negotiate back down to what it originally was. And she really saved a lot of money just by getting contact, with a buyer's rep. And a lot of people don't understand. I try to let the people know it don't come out of your pocket when you're working with a buyer's rep. So you don't have to pay for these wonderful services that I can provide.
Yeah, for sure. Okay.
So listen, you had talked about, we're going to go ahead and slide right on into it because you had talked about this program. I got to hear about this program. The streets is buzzing. They talking. I'm hearing people talking about this program you got. Yeah. They said, I don't know what they doing over there at Bell Bank, but I cannot compete with that. That's a little bit better than what I got going on over here. So I hate to lose it, but I'm going to have to lose it. So let's talk about that. How are we going to help save people thousands and thousands of dollars? Talk to me about this program.
Well, wonderful, man. I appreciate that. And all you said was true. This program we call it Moving Forward. Now, again, in my experience, one reason why I love working for banks, especially regional type banks or mid-sized banks, is because they still have a desire to help the community. They have a need and a requirement to help the community. And it's called CRA, or Community Reinvestment Act. And for them to be able to grow and do things they want to do, they put together special programs. And I actually had a part in helping to craft this program a little bit. So let's talk about it. The things I love about it. Now, the main hindrance for some people is the money they got to come out of pocket with when they get ready to buy a house, right? One of the main hindrances is how much out of pocket. FHA, government loan, 3.5%, right? So on 3.5%, on a $400,000 house, you're looking at $14,000, just the down payment. That doesn't include closing costs. Okay. And then we're coming out of a market now where, you couldn't get any help. It's still that way. Your offer, you want your offer to be solid, right?
Right.
So, but if you could get no help, you basically going to double that 14,000. It'd be like 28,000 to get in a house, a $400,000 house on the FHA loan. I mean, that's a lot of money, right? I mean, it is. Yep. And that's a low down payment loan, So this loan program, instead of that $400,000 on that, on that $400,000, instead of $14,000, we'd be looking at $4,000 as far as a down payment.
$10,000.
So that's a savings of $10,000 on the down payment.
Well, I can get a couple furnitures, a couple extra TVs from Black Friday with that.
Man, you can do a whole lot with that. It makes it, and that's the thing about it. It's not just, and a lot of times people think down payment assistance is for people who don't have money. The people that struggling and it's tight. Well, this is for people that can do something else with their money. Can save, can invest that money, can do different things.
Exactly. Good point.
So this program, and there are other programs. There's, we do THDA, we do VA loans. Okay, that's zero down. That's probably a favorite loan, but not everybody's a veteran. That's zero down, no mortgage insurance. Okay, that actually is a little bit better than the Moving Forward. We'll do those. We'll do the loans that make sense for people. There's USDA. If you're in an area that qualifies and your income is under a certain level.
So I was born and raised in the USDA area. How can I help the people back home?
Oh yeah, that's another one too. Great loan.
So what kind of benefits does that loan offer? The USDA.
Again, USDA is a zero down option. Okay.
So some people can go in and not have to pay nothing down.
Not have to pay anything down. Yes, sir. So that's another way to keep your money in your pocket. So the things on like USDA has to be in a qualifying area. There are income thresholds based on the area, based on the household size that we have to make sure. And sometimes if you're over those caps, then you don't qualify because they're designed to serve those areas, low to moderate income housing. Our Moving Forward loan has a similar aspect to that. If your income is under a certain amount, you can purchase any house in the area. And this is Tennessee we're talking about. But I just started a Facebook group called 1% Down Homes in Tennessee. And there's a special feature that I've learned. I'm really starting to really appreciate this loan because this is what makes it really special. We can go up to $647,200 as far as a loan amount. Most programs like this have a cutoff, like THDA's cutoff is $375,000. I know a lot of lenders that got a cutoff on programs like this is $400,000. We can go up to $647,200 too. And cool. And there's homes that there's no income restriction. and based on location. Okay, so I've started a private Facebook group, and I'm going to be posting homes that are in these areas, and it's not, any bad area or nothing like that. It's just that these are homes that qualify based on certain demographics. Okay.
Who can be a part of this Facebook? Who can be in this group?
If you're thinking about purchasing a home, you need to check it out. If you want to save that money on, let's get about a $500,000 house, $5,000 down. And here's the kicker too: there's no monthly mortgage insurance. No monthly mortgage insurance.
Hold on, rewind. You can't just slide that in there back like we just ain't gonna accept that. Hold on, time out.
Yeah.
So on a $400,000 home, mortgage insurance is probably somewhere at what, $250 maybe, $275 could be in the range.
You're gonna pay $283 a month.
$283. I was almost there, y'all. Look, I'm getting close with the numbers. $283 a month.
Right around $283 a month.
And that's a month.
And then you also, and then you have an upfront premium too. So you're getting hit up front, and it's in your loan, and then monthly on FHA. And guess what? It's for the life of the loan. So even though you might be getting a lower rate, that mortgage insurance is going to impact your bottom line as well. So this one right here, there's no mortgage insurance. So when we could put those side by side with saving you, instead of having to put 3.5% down, you're putting 1% down and no mortgage insurance. Come on, y'all. Listen. You owe it to yourselves.
Hey, listen, is it too late? I need to jump in on that one. So listen to y'all. Yeah. Hold on. You just said I can save possibly $10,000 up front.
Yeah.
And then save another almost $300 a month.
It's going to depend on how the rate's not going to be exactly the same. I'm totally transparent on things. The rate's going to be a little bit higher, but you're still going to save money. We'd have to do the numbers and look at it.
I love that because like you mentioned before, sometimes you're going to save more on one end on this program, and then you might save more on this end because there are things out there for a lot of people and a lot of different programs out there. But very rarely do you hear something where you're going to save kind of on both ends, because it's like, I'm going to give you this, but I'm going to have to take a lot of this, or I'm going to have to take a lot of this and give you that. And I like that because, like you said, either way it goes, it doesn't even matter if those numbers don't come out to be that exact what I said. Like anything that you're saving, it's going to be a blessing. And one thing I always try to remind people, guess what happens? If you do kind of get locked into a rate that you don't like, and let's just say within the next 2 years, the economy levels out and it does what it does, and then the rates go down, you can always refinance.
Yes,
you can always refinance. So, never look at the fact that I was hoping to pay a $2,000 a month mortgage. Because of the interest rate, I'm kind of stuck at $2,150, and that extra $150, I can do it, but I really don't want to do it. But you still can position yourself to where if you knock down 1%, in the next couple of years, you might be at $1,900 a month. So, don't be afraid.
That's truth, because I did that. When I bought my first house, it was a little tight. I always tell people we was on basic, everything basic. We had rabbit ears, you know what I mean? We had all that, but I refinanced for $100 a month. $100 a month. This is, I see a question there from Brother Randall there. It is a conventional loan, sir. Moving forward is a conventional loan. So here's a couple of other points. I'm not done with this product because I love it, y'all. Let me tell you. Again, DTI back in up to 50%. So that gives you some more flexibility.
Oh, the DTI on this one is 50?
Yep, up to 50% on the back end. We got a 43% front end. So a lot of the programs out there that are similar, they cut you down to like 36 or 43 back end ratio, where that restricts your purchase power. Okay. And again, they don't go up to 647 too either. They already got you down to, again, THDA in our market is 375. Nothing against these products, by the way. Love those products. Okay. But again, we'll use the right product for you. So this may not be for you. We also have what we call Borrower Smart, which is a grant that works good with Home Possible. So that's a 3% down conventional, and you can get a grant to cover some of the closing costs. That might make more sense. So it's just kind of a toolbox that we have.
So when you say grant, does that mean, do I got to pay that back? Come on now.
You don't have to pay back. Grants you don't have to pay back. It's a small grant, but it's money. It's going to cover something towards your closing costs. And then what I love to do with that one is do a lender credit. Man, we might do a lender credit of like 3,000, and then throw a grand in there on top of that, and you cover most of the closing costs in that situation. So it's different things that we can do, you know.
Hey, listen. You blowing my mind right here. You blowing my mind right here. Because listen, you're saving money and you're being able to put money back in folks' pocket. Hey,
Yeah.
and don't y'all forget out there now. Hey, from Middle Tennessee, you got me help represent you. You know, in West Tennessee, you got my main man, Mr. Pastor Keys, Randall Richmond, helping you in West Tennessee. So I'm here to let y'all know that, hey, we finna get back to where we can negotiate. Because they've been blowing my emails up right now. And the market is kind of positioning itself to where people are paying for closing costs. And so we finna have the negotiation power back. And when I get the negotiation power back, it's a wrap. But my first 6 clients, they only paid $500 for their house. My first 6 clients only paid $500 because, hey, I'm the negotiation king. So I like to know that. I like to hear that. Because listen, it's all about being able to have those products and being able to have that help.
Yep. Can I go on hit a couple other real quick points?
Yes, you can. This is your show. I told you, listen, we ain't got no time limit. I'm here all day.
Okay. So again, with that product, here's a kicker too. There's only a couple type of loans that will allow income-based student loan payments. So what does that mean? You know, one of and this is, you know, I went to through the recording industry program at MTSU. Thought I was going to come out like Jermaine Dupri or somebody, hit down in Atlanta, kick it. You know what I mean? I came out married with a baby and a homeowner and some responsibility. And so I ended up in finance, and I pushed through that. Been doing that the whole time. But in the process, I stacked up a whole bunch of student loan debt, man, a whole bunch of student loan debt. And I hate it, man. It's the thing that can prevent people. You know, we look at home ownership. That's the foundation of generational wealth. That's the foundation of building. Even with the pandemic, we see how important home ownership is. Because I got myself positioned where if I lost my job, my wife lost her job, I could look at my house and get some money. You know what I mean? Exactly. You know what I'm saying? So that's how important to me home ownership. It just blew my mind thinking like, hey, if we could live for a while without a job because we got some access, and that's what home ownership is about. You know, so student loans really, you know, FHA changed the rules about a year or so, maybe a little bit more ago. It was 1% of the balance. So if you owed, I see people with $100,000 in student loan debt, I'd have to count $1,000 a month against them just because even if they were paying zero because they're in a forbearance or in a deferment or in school, we still had to count that 1%. Now it's 0.5%, which would be $500 on the case of 100,000. But believe you me, I see people with that kind of debt and higher coming out of school. I just went through the numbers, right? You know, if you're making $5,000 a month, it was down to $2,250. Now you got a car loan of $500. Now you got to count student loan of $500. Now you're down to a $500 house note, right? So for those people that are in that space where their income is not where it needs to be right now, they just hadn't got to that point professionally, but they went to school and they're doing the right. I'm passionate about this. They're doing what they was told to do. That's what I was told to do. Go to school. You're going to make all this money. Don't worry about getting these student loans. You're going to be all right. You're going to be down there kicking and selling all them records and then, you know, whatever, you know. But whatever it is you chose to do, a lot of times that reality, as we know, it don't happen like that. So you get out, you getting by, but you got this student loan debt. Well, if you're in an income-based repayment plan, a lot of times if your income's not quite where it needs to be, you can get on that plan and they'll work with you, and that payment may even be zero. So if you owe $100,000 and the payment is zero or $100, I got a couple of loans that will take that income-based repayment plan. One of it's Fannie Mae. You can do 3% down, okay, on that one. But also, guess which one? The moving forward one. so now we really yeah. So that right there is I love this loan, man. It allows for more purchase power. Man, so
time out. So we not only saving money with the moving forward loan. Yeah. I don't know if you remember this. I mean, and you may not, because you know I done ran so many people through. You know, you just can't be remembering all of them. So the very, very first client that I had brought to you when I first met you, it was a young lady. She was real young, single mom. She had just been out of school probably about 3 years. Everything else, her credit was fine, and she had all her ducks in a row. And I was proud of her because she was raised by a single dad, and he took care of it, and he made sure she knew what to do. But the only problem was she was only making about, I think, $40,000, if I can remember. And then she had this car note. She had a brand new Nissan Altima, and she was paying about $600. And then she had them student loans. And at the time, because of the student loans and because of what you had to factor in with the student loans and that car note, she couldn't get into a house because the house that she would have to get almost had to be a house worth $50,000 because it literally, she couldn't get, she only had about another $300 or $400-500 just to play with, and you couldn't buy no house with that, and I had to lose her as a client. But she was somebody that she didn't have credit issues. She knew how to pay her bills on time. She just, when she got the car, she just happened to get the car at a high interest rate, and then you had to factor in those loans, and that just bumped her out of being able to purchase a house. And I felt bad because, like I said, she was a single mom, but she was on her grind. She was doing what she was supposed to do, and a lot of times I'm just glad to know that y'all got something that's going to help those sometimes, help the people that when we say, just like you said, we were all told the same thing. We were told that, and it's okay that we were, we went out and we got that education. But like I said, I hate being penalized for getting that education sometimes. You know what I'm saying?
Yeah, for sure. And again, these are all, different tools or factors of this loan. Everybody's an individual. We got to walk through the process. Exactly. Things change all the time. And the big thing right now, though, is everybody's in the forbearance because of COVID.
Yeah.
So people will take that zero payment because they're in a forbearance, but they don't want to get on an income-based plan because they got a payment now. You see what I'm saying? Or, so that's the thing that sometimes if they're in a forbearance or deferment, we got to count 1% on that loan. So,
okay. So do you ever get in a situation where you got to educate them to say it might be better for them to go ahead and get on the income base?
Yeah. Find out what you can do and see where you are. But again, people are like, well, I'm paying zero. If I do this, I might have a payment. You know what I mean? So it's just, again, that type of thing that has to be worked out, But yeah, several factors in the loans and the detail. Like I said, these loans change sometimes, but this one, we've structured this. It's been about a year or so since we rolled it out, and I love it.
How many have y'all written up with this specific one?
Man, as a company, I don't know the numbers, but again, we're still just getting the word out there, and it's one that, it's even as a loan officer, it's taken me some getting used to. What really opened my eyes was about a week and a half ago. Occasionally I'll get out and go open house, running on a Sunday or something like that. And so I said, I'm gonna go and see how many houses I can find that's in this program. Again, there are qualifications of certain houses that reduce the income restriction, well, eliminate. So, okay, let me explain. These programs are based on, a lot of them are based on maximum income per household or per borrower. Like THDA has a maximum income, USDA. So does Moving Forward. Okay. But if you purchase a house that are in certain areas or have certain qualifications, as far as the house, it eliminates the income limit. So you can make 100,000, 200,000 and still put the 1% down, So I found that's the purpose of the group that I'm going to be featuring houses that are in some of those areas, because when you start saying that, a lot of times people think that this house is not a desirable house, where that, I found some beautiful houses, and it's just, I just want to share that so people will see, these homes that are qualifying. And I'm, we're talking, go ahead.
No, I was just okay. Yeah, that sounds good. And actually, I'm dropping a listing this weekend. And I might send you the information over, and then that way you can kind of do the numbers and let me know, how does that house stack up even from a listing standpoint.
For sure. And then we also have some great marketing tools, list reports, different things like that we use that can help co-brand and get the word out. I'm getting the word out about these houses, and I instantly co-brand with partners like yourself and try to share the word and help you market,
Listen, that's what it's all about, because when you help me, we help them. So at the end of the day, it's all about helping the people get into the homes. It's all about being here for the cause. And like I said, I've always been there for the cause. So you got anything else to share?
Hey, man, I'm excited. That's what I love about this job. It's crazy sometimes, but I love helping families reach that goal of home ownership. I think it does. It's done a lot for me personally. Homeownership. I come from very little education about finances, so getting to this point and be able to see what I've been able to do, I just want to be able to help other people do the same thing.
Listen. I know you do, and that's one reason why I'm glad that we got a chance to connect when we did. And listen, it's been a blessing ever since. And just being able to have you to be able to educate myself, being able to help my clients, and I love it, and I love what you do, and I love how you try to integrate the technology in it, because it's almost like you're not going to be standing still at this point. Some people don't want to kind of give in to the changes, and we got to get out of that. The world is going to change, and you got to be willing to change with it, and you have been willing to change with it and kind of evolve with what's going on and staying on top of everything. So listen, you guys, I brought to you the expert, and I know we ran a lot of information by you, and I know you're going to say I still don't get it, and that's okay, because he will answer any of your questions one-on-one all day long. You see his email. Y'all can hit him up on the email. You could always ask, any questions on this live thread, because he's tagged on this thread. So even if you see this thread 10 years from now, y'all still could be on this thread, and y'all can ask a question, and we most definitely can get you an answer, or get you on a phone call with him and everything. What was you about to say?
Yeah. Oh no, it's all good, man. I'll probably jump on and put a link to the group if anybody wants to check that out.
Most definitely. I was just going to say, please add a link to the group so we can get people added. Yeah. And if you know anybody that's looking for a home, anybody's even thought about it, or even if they just asked one question about a house, and that it's in the back of their mind, go ahead and help them out. Because a lot of times, my last couple of clients, they was like, I didn't even know I was this close. I had a young lady the other day, she just got in touch with me, and I was asking questions about her credit, trying to get her in this step. And I said, well, your credit's not actually bad. And I was like, we probably could be going a little bit faster than what you think we can. And so she's going to be excited. So I'm most definitely going to run her by you and have you check her profile out, because one thing I noticed she was looking at is she was looking at some townhomes. And and like I said, I know y'all got, like I just heard, you got programs to help everybody. So listen, she most definitely is one I'm finna run you by. So listen, I appreciate you. Like I said, I'm not gonna hold everybody. Always remember, just because you missed it don't mean you can't watch the playback, because that's what it's here for. It's here to watch the playback. You tag somebody, let them know that this information is out there, and we're gonna have to stop saying somebody didn't tell me that, or I didn't know that, because that's what me and Mr. Stanley are here for, to tell you what you need to know. So y'all have a wonderful day. Mr. Stanley.
Yes, sir.
I appreciate you. I love you. Thank you for coming through. We most definitely gonna have to do this again sometime. And y'all have a wonderful day. You have a wonderful weekend, sir.
All right. Thank you. All right.